You were listening to chartingwealth.com for Friday, the 7th of October, 2016. Market down today. Now, what's really going on? Well, we're in a confirmed downtrend on the weekly chart, the 2-day chart, and the market keeps going down. We keep seeing a reduction in that downward momentum, but the market keeps either shifting sideways or moving down. Now, I'm sorry that our broadcast is coming out so late today. We were actually fleeing the hurricane, so we had to do a little traveling. Not totally unexpected, but we just didn't want to be around for the worst of it. So what's going on? Well, the market crossed over going down on our 2-day chart all the way back, as we've told you, since the 24th of August. It slid sideways, dropped precipitously, went up a little bit in mid-September, and then been sliding sideways since then on into October. Down day on the total chart, barely 0.04%. If we look what went on intraday on our 4-hour chart, we can see there was a lot of down movement in the morning, and then it recovered a little bit in the afternoon. We're below the 2-day trend line. We crossed over going down back on the 4th. On the total market, we're still in a confirmed down move, both on our weekly chart, our 2-day chart, and our 4-hour chart. Derivative oscillator still in the negative. We can see that throughout the course of the day, at the end of the day, the MACD kinked over on the 4-hour chart and is heading up toward the signal line, but it has not crossed yet. And the derivative oscillator lost a little bit of energy, though, is still negative right now. That's the total market, IYY. Now we're going to go to the SPY. That's the Standard & Poor's 500 index fund. It tracks those 500 big stocks that make up so much of the volume in the market. What do we see going on there? Well, it was actually up 0.07% for the day. But when we really explore that, what do we have going on our 2-day chart? The first day of the new 2-day candle, we have a doji. What's a doji? Well, that is where the bulls and the bears pretty much equal each other out, and we have indecision is what the first day of this 2-day candle shows. After not quite a doji, but a hammer, probably we would call that. Yes, the prior 2-day candle, a red down candle, a lot more down wick than up wick. So again, the market isn't a confirmed down move on the S&P 500 again. That moved over just like the total market did, going down back on the 24th of August. So we had a lot of down move. The down move tricked out around the 19th. Then we saw the derivative oscillator starting to lose its energy. It's getting very thin. The derivative oscillator is on the negative, and the MACD is really sliding sideways. So the market's trying to get enough energy to move up, but it can't match the bump up the market had on that 2-day candle on the 23rd. Then it lost it on the 27th, beginning that new week, that's of September. And the market's tried to take off again, and it's really just slid sideways. Now, if we look intraday, what do we see going on our 4-hour chart? We see that there was down movement in the morning, big down wick, the market down, then recovered some in the afternoon, crossed over going up in the afternoon on the 4-hour chart, and the derivative oscillator went positive. But again, remember, still in a confirmed down move on the 2-day chart and on the weekly chart. All things being equal, remember the market tends to move in the direction of the largest chart, and that is the weekly chart. Again, what it's really doing, sliding sideways at this point. Now we're going to go back to the 2-day chart, and we're going to go to the Qs, which was down. This is the NASDAQ 100.05%. Now remember, the Qs is on the weekly chart in a confirmed up move. On the 2-day chart since the 26th of August, it's in a confirmed down move. Derivative oscillators flipped over going up. The MACD never has. MACD still negative and actually trending down a little bit. We see the newest candle that's starting to draw. It won't be completed until the end of the day on Friday the 7th, the 2-day candle. What we see again, is a red a spinning top is pretty much what that is. A spinning top is what we have, an open red box spinning top. Again, indecision. We've come inside the Bollinger Bands. Bollinger Bands are volatility bands. Rarely can the market stay outside those Bollinger Bands very long. It's come inside there. Typically that means that it's lost its momentum. It's going to be going down. But again, derivative oscillators flipped over, but our big indicator, the MACD, still going down. Let's check out what went on intraday. Intraday, we switched over in the afternoon, going down, even though it was a green candle toward the end of the day. Derivative oscillators in the green, but lost some of its energy. The MACD rotated over. So what do we have going on across the board on all of these charts? We're sliding sideways. The Qs is trying its best to continue to keep going up, but it is hard. We do have a hurricane underway that can affect some things, but really the market is just struggling to find something to keep it going up because it's been pumped up artificially, I believe, for quite a while. But you know what? My opinion doesn't matter for squat. What matters is what the charts tell us. And what the charts tell us is we're in a negative bias at this time. Q's still in a weekly uptrend, but the market's really sliding sideways. Our other two charts, the S&P 500 and the total market, in a downward trend. Now, lastly, let's go to gold, which is in a huge downtrend. Don't forget, Soros sold off a lot of his gold back in August, if I recall correctly, and gold is headed down. Gold has been going down since, oh, look, August. Crossed over going down on the 8th of August and has gone down precipitously over the last, really, two candles, or two-day candles. Huge down moves in gold. Gold was already tracking down, and again, gold moved over going down all the way back on the 8th of August. Now let's look at our 4-hour chart, which is our trading chart. It's been working for us in gold. Folks, if you would have jumped in on an inverse gold fund on the 28th of September, my word, look at where you would be. It was at its lowest. If you would have bought the worst position possible at $125.73, $125.73, what did it close at? About $8 lower today. That's incredible over a very short period of time. Don't you love this chart? It's been working wonderfully for going up and going down for several months now. What a beautiful, gorgeous chart we see. Again, not totally perfect, but doggone it, I would say it's perfect, what, about 80% of the time? Beautiful. That's where we ended the market on Thursday, the 6th, as we go into the last day of the week. We appreciate you joining us. We love to hear from you. If you appreciate what we do, go to iTunes, give us a 5-star rating, and subscribe to our podcast. Keep driving up our numbers for us. We so appreciate it. It allows us to share information with more people. If you're not already subscribed to the podcast, well, you need to do that at iTunes, but also go to our website, chartingwealth.com. Sign up for our newsletter where we'll send you this podcast in video form every single day. Plus, you'll get our How to Read a Stock Chart video, you'll get our daily market worksheet, and you'll get our layout. And you can always communicate with us there. One last thing, please go to our YouTube channel and subscribe. We love to hear from you. Write us there at the website. Let us know what else you need. Great trainings online. We're here for you. God bless. Take care. Hope your week ends on a high note. From chartingwealth.com.